Okay, everybody, this is the Option Professor, and I'm going to be trying to go over the energy markets, which are at a point that looks like they're very much at a crossroads here that are very interesting. That's why I'm putting the presentation together. Quick background on myself. I've been doing this for over 40 years. Obviously, we've done seminars throughout the country for thousands of people during that time. So we are knowledgeable on stocks, options, and all these other markets as well, because we've been doing it our whole life. And we like to share that knowledge with people that obviously don't have that much experience and knowledge, and try to help them become more informed investors, which is, I think we've done a very good job at. So again, this is just sharing my opinion. This is just sharing my views. As far as advice, we don't give advice because, again, that's the job of the brokerage firm. They know your suitability and your risk tolerance. We have no idea. So basically, I'll be showing you my opinions here today. Let's get into it. Okay, I'm going to start off with putting up on the graph here the XLE. Well, let's start out with the actual products. Okay, we'll start out with the actual products. We're going to start out with the price of crude oil. Okay, and this is going to be West Texas Intermediate, not Brent. Okay, so we're talking about West Texas Intermediate, and we're going to start with a 20-year graph to put it in perspective, right? Now, we've been believers, unless you can get above 80, 83, and then 90, 93, you can forget about $100 crude, right? Because you can't get there without going through those numbers. And the market's had some trouble getting through those numbers, and that's for sure. Now, where are we getting these numbers from? You can see the moving averages are telling us those numbers. Right now, the 24 is at 82. So that's why we got to get above 82, 83. And then the red number comes in at 92. So that's why we got to get above that. The red line is starting to point down. That's not a good thing. So the longer we stay under 92, the more that it's possible that actually oil could drop very sharply as opposed to go up. And that would shock a lot of people. RSI is hanging right in there. So this is why we're saying, look at this. You've got the 36 SMA and you got the 120 SMA, and it's sitting together at 67 bucks, 67, 68 bucks. So that's why we say that's a very important area for it to hold, right? Now, you can see last time it was down here, it did hold. That was back in December 2021. It held almost to the penny. The 120 was at 54, and the low was like 62. So excuse me, the 120 was at 61 and the low was at 62. That's pretty close, right? And then look at the rally you got off of that. So right now, where are we at? These are at 67, 68. The market has come down as low as 70. So it's come down and tested. And this is the neighborhood where it better hold, along with your RSI right at 48. If we're going to get this big rally back above 100 or more by spring and summer that some people are touting. Rather than going to touts, I like to follow the prices. Okay, so that's your story on crude. It could be a very good bargain down here. Or if this thing starts breaking under 68, 67, you start seeing a 50 print, something's happening. I don't know if it's going to be like this again, but certainly you don't want it trading consistently under 67 bucks, and definitely not under 60. Okay, so keep an eye on crude, let the numbers dictate your activity. That's our view. Looking at natural gas, because those are the two main things here, right? Natural gas. Now, I can't tell you how many people are on TV telling us that natural gas was a giveaway price at $6 last October, okay? And it's going to go right back to 10. Well, they couldn't have been more wrong if they wanted to be. So again, last fall, October, this thing was trading at 7. And of course, it was supposed to be a bargain that was going to go back to 10. Rather than going back to 10, this thing collapsed to a low that's almost getting near the low of the COVID bottom. Okay, so this thing has really, really dropped. Okay, and RSI has come way, way down. Now, again, this is an area where one might start thinking a reversion to the mean could happen. What would make that happen would be obviously a big pickup in demand, like this winter starts getting really cold. Before it goes away in Europe, et cetera. And they start needing a lot of this. And then we hit the summer. And of course, we need a lot for the air conditioning. That's the kind of thing that can get you a reversion to the mean trade. What would be the first signals that could be starting to happen? We would look to the 1 month graph, and we can see it's getting above the red line. So that comes in at 223. So staying above 223 and getting the red line to point up on the monthly would be helpful. On the 1 year, the red line comes in at 242. So getting back above 242 and getting the red line to turn up would also be helpful. So there's a couple of little lines in the sand, but you can see a reversion to the mean trade is certainly not totally off the rocker, because again, notice your RSI. This is our signal. You see the RSI here? Where are we? RSI is at 23 at these lows. What is the RSI over here? 31, right? Well, here's the low and it was 23. Look at this brand new low and RSI is at 29. So that's a divergence, and that could be an indicator that it's getting exhausted down here. So we keep an eye on it and we take a look. Now, since we're on natural gas, I might as well throw two of the ones up there that we follow. One is RRC. And you can see on RRC that it's under some pressure because obviously look at the underlying thing. But if it can get back above 25 and then 27, that would open the door. So I'd be careful on this one. Obviously, it's very much on the defensive. And what would be the earliest that it could even make a turn? Again, it doesn't look very good, but there is a big gap there. So you got to be careful on this, except if you look at the long term, and the long term still has a slope to it. It's holding the green line. See, this is why we look at things on different time zones. You'd have no idea that it's hitting the 24 on the monthly. On the 20 year, and that comes in at 22.79. So this stock, you want it to stay above 22 bucks right there. And then, of course, you want it to stay above the big low here. And the RSI is not broken under 50 yet. So we'd keep an eye on this. And if it starts getting back above the purple, which comes in at 25 and 26, again, that could be giving you the idea that it could be on its way, because there's a lot of real estate up here to be done if natural gas gets hairy again, right? So again, you got the RSI still above 50 on the long-term graph, and you've got it hitting the green line. You've got the commodity down at $2. I mean, I don't think we're going to go to free natural gas, are we? It's only $2 away from free. So anyway, this is one to keep an eye on, and it has a history. If it gets going, that it could be pretty good. So keep an eye on it. Looks obviously premature, maybe, but I'd keep an eye on it, especially if you were bullish on natural gas. Okay. On crude oil, there's a bunch of different ways to go here. One other one we're going to talk about real quick is uranium, which is an energy product, because this one looks like it might have something to do. Cameco, take a look at Cameco. This is the uranium deal. Okay, looking at the 20-year graph, that looks like it's an uptrending deal. And it looks like if it gets above 30, there's a lot of real estate it could fill. And it definitely has a little bit of a bounce to it. RSI is clearly above 50 for the last 2 years. So it's not a new bull market, but it looks like one that's got more to maybe go. So keep an eye on it. And then basically, if you look at the 5-year graph, again, it tells you where all these support lines are. Look at the purple line. Purple is like lovely, right? Every time it gets near purple, it's a fantastic buy, right? Got near purple when? Got near purple back in December. Was it a good buy? Well, it looks like it's been a good buy so far. It has resistance up here. But again, it gives you an idea. If it breaks that resistance, what's on the other side? Well, this thing has traded up to back in 07, it traded at 55, and in 10, it traded at 45. And so, if circumstances and this stuff starts coming more and more popular, you don't know exactly where the prices will go. But this is one in the uranium sector that might be worthwhile to keep an eye on. And then the last thing was charge point for the electric situation we've been kind of keeping an eye on. That had some trouble, but it's gone back on the bicycle a little bit. Let's take a look at its charts and see if there looks like it might be going someplace here. Let's take a look. This thing hadn't been around that long, so let's look at the 1 year. Okay, so as long as we can stay above this 11 number, okay, and hopefully stay above 12, and then ultimately maybe take out this area here, there could be something happening there. It's pulling back, right? It's pulling back, but the RSI is still being able to hold up so far above 50. And looking at the 5-year graph, Again, it hadn't been around that long, so it doesn't give you that much details. But this is the electric stations. So if they have any hope of, getting like many stations to charge up these vehicles, this is one of the front dogs on that type of thing. So I have to keep an eye on it. Again, it's so new, and but it does look like it might be trying to turn. So it's something to keep an eye on. Okay, that gives you a little bit on the peripheral here. Now let's talk about the main stuff, which is XLE, which is basically half of it almost is Exxon and Chevron. Okay, so here, if you want to, XLE, not XLLE. Okay. And again, this one's on the defensive and it broke under the purple. That's not good. So if it gets back above the purple, maybe that's a good thing. And so use that purple line there of 85 bucks as a key thing. Gets back above 85, and maybe that 84 pullback there is about it. Again, it's got to get through 88, got to get through 90, just like crude. It's got wood to chop. Now, if it gets above all this stuff, then it could really get going. These companies like Exxon and Chevron have been minting money. In fact, they got so much, they're buying back their stocks. I think $75 billion buyback on one of them. And then, of course, they're sending out dividends like ice cream cones. So again, free cash flow on these stocks have been a really good place to be. Again, let's take a quick look here at Exxon and Chevron, since they're the lead dogs in this one. Exxon, 20-year graph. Okay. See, what the problem here is this is just my opinion. When I look at a chart like that, it's not if it's going to come down and revert to the mean, it's when. It's when. Just like when it's down here, it's not if it's going to rally back to those averages, it's when, right? So right now we are at these levels 120, that's pretty darn far away from the averages. So I want no part of it up here, because again, it's hardly cheap up there. Plus, if I look at the RSI, it hit 70 here, and then the RSI here was 67. Not much of a divergence, but a little bit. And the RSI here does look like it's peaking out a little bit. Again, you got to be careful when it gets this far away from the moving averages. It did it back in 07, 08, and it wasn't so pretty, right? So I'm a little bit concerned about some of these stocks like that are so far away from their moving averages. Chevron's probably the same story. Yeah. And obviously it already came down from 120 to 160. It already had a reversion to the mean to the first level. Okay. So that's why you have to be careful when they get very far away from their moving averages on any market. Okay. Trees don't grow to the sky, and they can't get under zero. Right. So you have to always remember that. Okay. XOP is the explorers, right? Oil and gas exploration. So XOP and producers. Okay, this one doesn't have that much history to it, so I'm going to use the 5-year graph, give you some better looking data. Okay, so this one here, again, never really got crazily overbought as the other. It's got higher lows, right? Higher lows. So if it starts breaking above 140 and then 150, this thing could go someplace. So, and again, are we going to be looking for oil and producing more? We better, because that electric vehicle transformation is taking a lot more time than people thought. So this could be very interesting. And this is more interesting than obviously Chevron and Exxon to me. So keep an eye on this guy. Some of the stocks in this one include what? It includes, let me see here for you. PPF. Hold on here. Oh, I got one here. PR. Permian Resources, take a look. Now, there's a lot of stocks in this one. So that's why using the index might be the better way to go, because all of them are like very low percentages of the whole thing. But you can see here, this thing used to be at 20. And again, if it can, hold its water here in the 9s, and the RSI, it's having a pullback, right? Like all of it does. But it starts trading above the high here of 11 bucks. That would be something that could get some legs. So keep an eye on this, because again, this is in the area that could be in high demand looking forward. Another one is CPE. And looking at CPE, what do we got? And again, if you want to take a look at options on this stuff, this is the kind of stuff that you might do what they call a leap or a long-term option. Why? Because you go out very well. Let's look at them. Let's see what they look like. What the heck? That's what we're here for, right? Let's go to option prices on. Again, we need to get above 45 bucks to get this thing anywhere looking like it's going. Let's see if it goes been around. It's been around a long time. It's holding the blue line. That's good. Where's the blue line come in? 33 bucks. We don't want this thing under 33 bucks. And reversion to the mean would be 60. That's plenty of real estate between what? 33 and 60. So if you think there could be a move towards 60, let's see what the options go for with longer term maturity, just to give you an example. Option prices, target of 60 bucks at some point. Let's see how far out we can go. We can go out to January of 25. Let's see if there's any options available for 25. Give you the rest of this year and all of next year. And let's see what they'd go for. Let's see, your target is 60, right? So if your target is 60, and let's see if you did a spread of buy the 40s at $12.90. Let's round it to 13 and say you sold the 60s and you received 5. So say the spread can be done at 7. 7, if you hit 60 or better and the spread went to the full differential of 20, it would give you a possibility of $7 going to about 20 bucks. So not the options obviously are not that cheap. Let's say if we just went out till January of next year, and that'll give you the rest of this year to get it to move. Let's see if that's a little better deal. Here, if you go with a 40 call for about $7.30 and sell the 60s for 208, then you're looking at $5 and change and a possibility of 20. So that's a 4-to-1 deal. It doesn't sound too bad. Maximum. And of course, if it stays under 40 and time runs out, you lose on both of them. But again, that gives you a little bit of a universe of what some of these things look like as far as the options are concerned. Let's see here if we can go back to what we had on there. And then we're going to look at one last one there. DINO is Sinclair, and Hess is also 2 of them that are in there. But again, with this particular one, using the index might be better because these are all pretty small percentages. It's not like Exxon and Chevron is like 40% of XLE. These ones are tiny comparatively. So basically the XOP is probably the better way of going to get what? A little broad-based exposure. Okay, the last 2 here that I wanted to talk about. One is OIH, and this is one we're quite keen on. This is oil servicing. Again, when these guys start looking for stuff, they're going to need these companies to help them. That's Schlumberger, Halliburton, to name 2. They're the lead dogs in this ETF. So let's. Okay, I want to go back to interactive charts. Give me a second here. Let me go back to interactive charts and get back there. Okay, good. Thank you. Okay, so we're going to OIH. That's the ETF that has this stuff in there. Okay. Now look at this on a 20-year basis. We've got keen on this thing already. And where did we get keen on it? Look, down here at about 100, and then we got back keen at it at 250, and we'd like it to keep going and get above this 400 if it could. So there's a little bit of a cap above it. And so you have to be a little bit careful because, again, if this oil starts collapsing, they're not probably going to look for any because that means obviously there's plenty of oil around, right? So this is if we're going to get the 90, 100, or 100 something, and if we're going to stop selling out of strategic petroleum reserve and we're going to actually go after some exploration, and maybe these companies stop just returning money to shareholders and buying back their own stock. You get it? If that starts changing, then these are the ones that could benefit quite a bit. Going back on the 5-year graph here, you can see, yeah, there's a little bit of a flattening out right now. So again, you need to get this thing back above the 35 and stuff. They've had a big run. Again, the buy signal came in here at like 225. So obviously it's already had a pretty good run. The two lead dogs, let me show you those. Schlumberger, drill bits, right? Let's see what they've got going here. Okay. Yeah, you can see it's already had a big run. It's already had a big run. We got buy signals down here at 35 bucks. Actually, we first got them, down here at 15 bucks. This thing has been in a kind of a buy signal zone for a while. Looking at the long-term graph, you can see it here. You see 15, 20 bucks. That's where the buy signal came out, and that red line's still pointing up, right? Now, this high point had an RSI of 65. This high point has 63. So that's a pretty big new up move without a big new RSI, and that's why you're backing off here about 10 bucks. But again, it's still above the purple, so 50 bucks is very important. If it can stay above 50 bucks, I think that's very key. And then if it can get going further, it opens the door to these big numbers up here. But on a 20-year graph, that thing has been in the bull market here now for a while. And yes, it could have a sharp pullback if oil goes down to 67 or 70. But if it does that and it holds this 45 number, definitely holds a 40 number, again, there could be a bright future if they want to look for oil and if the oil market on the SPRs stop getting sold and stuff like that. Okay. The other one is Halliburton. And Halliburton, again, is again, a double peak up here. Your high up here was RSI was 55. Over here, RSI is 56. No big divergence. Relative strength is pointing down, but it's still above 50. Where'd you get the buy signal? Look at this. You got the buy signal down here, right? And then basically it's been rising ever since. You got violated here, but look, when the moving average does not point down, that's why you don't get negative just because it got broke, especially when you got a net under here with the blue line and the green. So the net of the green and the blue got nailed. And within how long did it take to get back above the red? Not very long. So that's why you don't get squeezed out all the time. That's how you do risk management is what? Now, of course, when you get way away from the averages, what did I say? When you get to 45 and the averages are way down here, you're going to revert to the mean, right? And we may even revert to the mean here. We already have gotten to the red line. And of course, if things get a little dodgy, going down to green is not out of the question either. So again, but this thing could have some good potential because it has traded much higher in history. And again, this is all about, they're going to look for energy and they're going to start, putting money into the servicing and the exploration to find more energy. If that's the case looking forward, and Joe Biden is talking about, we're going to need oil, fossil fuels for a lot longer, then there could be a very nice trend here, and a pullback like we're seeing here could be an opportunity. Again, the RSI has been pretty nicely above the 50 number. Another one, I'll just give you a couple of other ones. Baker Hughes. This one looks actually better than the other ones in some respects. Yeah, you know what I mean? This thing had a big pullback to the blue line and is still starting to go. It could be looking to take out that 40 at some point. So you want it to stay above what? 26, 29, 23. You want it to stay above, well, definitely above the 26, 29 numbers. And then, of course, if you can take out 40, it does open up the door to quite a bit. So Baker Hughes could be a very big recipient. But again, the whole thing's on a defensive right now. Again, we've had tough energy markets here, having a hard time with 83. You start getting above 80, 82, 83, that's your first signal that, hey, something might be turning. You get above 92, 93, it is turning. So again, these things would probably benefit if crude can start doing stuff like that. So keep an eye on that as well. And of course, the Russian oil situation is a big wild card as well. And China coming out, how much demand is going to come out of them? It's supposed to be big. supposed to be big. And so you got big demand coming out of China. Everyone still has their jobs in the US. And, a lot of the country has crappy weather now. When that weather gets better, you got to figure they're going to drive more. So the demand thing should be there. And if the supply is not there, that should shoot the crude up. And if it does shoot the crude up, these guys will probably get knocks on their door that they got to look for some more energy. And that's where the exploration companies and the servicers could actually be quite something to be keeping an eye on. Last one is a real cheapie. We liked it at $2 and $3. And now it's had a big move. It's called Transocean. And this one here, could, it's obviously been great. $2 or $3 has gone. They'll give you the 5-year graph to give you a better perspective. We get the signal here at what, $3? And then basically, but a reversion back to the mean is not out of the question here. So that's why this is a tough neighborhood to just start doing something. But, when you get your signals and it's in a hot area like energy, you gotta respect that. And again, this far away from the averages obviously would be concerning because of the fact that obviously a reversion to the mean potential could be happening there. Let's take a look at one other market, and this is unleaded gasoline. And this could be something to at least put into your research here. So let me show you what we got here. Gasoline. Okay, this is the March contract, I hope. Nope, it's not. Let's go back and get it for you, and we'll close out with this. All right, let's see if this thing will cooperate. Yeah, because this is very interesting to us in our research. Okay, gasoline. This should give me what I'm looking for. Okay, here you go. Go back on a 20-year graph, give you perspective. Okay. All right. Here's the opinion, right? Thing goes to 420. What did I tell you about reverting to the mean? You remember? That's what it looks like. That's called a reversion to the mean. What did it hold? It held $2, right? Is that a coincidence? No. So now it's back on the bicycle. The red line is starting to turn over a little bit. That's not good. But we are in a situation now where it could be a situation where the demand for gasoline worldwide could get very, very high. And I don't know how many refineries we built in the last 20 years, but I don't think it's a lot. So the demand from China, a summer driving season, and other factors seasonally could have an effect on this. And if the supplies get pinched, is it possible we could have a rebound rally going into the 4th of July? And if in fact that were to occur, is there value in anything involved with gasoline down here? And there would be something to keep an eye on. So again, you've had the drop down to 2, and that happened in December. You see December in the box there? So the correction happened. If you take out 2, then obviously all bets are off. But if you don't, could this be a value down here? And we have a suspicion that it could, particularly if we get some kind of a demand going into the 4th of July. Some people might even say Memorial Day. That's when summer kicks off, right? Okay, so where could we get signals that it could be better sooner? How about the 1-month graph? What's that telling us? See, it's holding the red, which is good. And the purple comes in right here. And this is obviously the April contract trading at 265, not the spot contract. And then basically you're looking at having it stay above 265. So it's right there. It's right there with a rising red line, which is not a bad thing to see. And then basically RSI is above 50. Now let's look at the 1 year. 1 year, you got a big traffic jam here between the 36 and the 12 coming in where? Right at 264. So this is a neighborhood to keep an eye on it. And you certainly don't want it underneath 260. And your RSI is at 50. So again, this is a neighborhood where we would find it kind of interesting. All right. Again, this is the Option Professor. And I'm inviting you to go over to optionprofessor.com, OPTION. PROFESSOR.com. put in your contact information. You can talk to me directly. You can ask me any questions you have on the options, any questions you have on the energy. And also we will share with you our ideas and our opinions. Again, we don't give advice out. That's for your brokerage firm and you, because we don't know your risk tolerance, nor do we know your suitability. So that's why we don't give advice, but we do have opinions, and then we do share our opinions. So go over to optionprofessor.com, put in your information, talk to us directly, ask your questions. We'll help you with our opinions, and then hopefully it'll be of value to you. We certainly do think. We've been doing it for over 40 years. Obviously, we have a certain amount of product knowledge we can share with you. Okay, thanks a lot for being here, guys. We went over a lot of information, so you should have some questions for me. So again, go over to the website, and then I'll ring you up, and we can talk when it's convenient for both of us to figure out how we can help. Okay, optionprofessor.com. Have a great day, everybody.